Okay, when you think of building wealth, what's the first thing that pops into your head? Is it, flashy spending, luxury cars, maybe huge houses? Or could it be something, well, a bit more disciplined, maybe less visible, even a little unconventional? Today, we're doing a deep dive into exactly that. The sometimes, let's say, unconventional, often surprising, but really practical habits and paths that truly wealthy people follow. We're here to challenge some of those common assumptions about what it really takes to build lasting wealth. We want to get past the flashy headlines and look at the actual intentional choices that make a difference. Our sources today are, well, they're a really fascinating mix. We've got insights into grounded everyday money habits, some intriguing looks at newer investment areas like trading and crypto, and even a look at how value itself can sometimes seem to be created out of, well, almost nothing. It's definitely a journey that might just reshape how you think about financial growth. Think of this deep dive as your shortcut, maybe a guided tour to understanding how wealth is actually built. We're going to focus on those intentional choices, the surprising insights, keep you informed without, the overwhelm. I'm honestly really excited to unpack these unexpected strategies with you.
Absolutely. And I think what's really key here isn't just listing what these strategies are, but getting into the deeper why. Why do these sometimes unconventional approaches work? It often comes down to a fundamental mindset shift, a different way of looking at things that many people overlook, but it's essential for unlocking these opportunities and building wealth that lasts.
Okay, yeah, let's unpack that. So, our first segment dives right into the everyday habits of millionaires. And honestly, they're probably not what you'd picture first, practical,
Yes.
but sometimes called weird because they kind of go against the grain, against that popular image of wealth.
hmm And what's really fascinating, as you said, is that these aren't just random tips. They really represent a fundamental shift in thinking
Yeah.
towards incredibly intentional financial choices. Discipline. It's about being very, very deliberate with your money, seeing it as a tool, not just something to spend.
Totally. And the first one is huge, maybe the hardest for a lot of people, avoiding lifestyle inflation. So as their income goes up, millionaires consciously, almost stubbornly keep their expenses low. They fight that, almost automatic urge to upgrade the house, the car, the holidays, just because they can.
Right.
It's about deliberately stopping spending from expanding just because earning did. That's a constant battle, isn't it? You get a raise, you think new gadget.
It is, and it comes down to really clear priorities. They see more income not as just more spending money, but as fuel to accelerate wealth building. So instead of chasing a fancier lifestyle right away, they prioritize putting that extra money to work, which that leads directly to the second habit, treating every single dollar like an employee. Now that sounds catchy, but it's a core idea. Instead of just spending, they actively give every dollar a job, investing it in things that generate more income stocks, real estate, businesses. Each dollar is tasked with earning more dollars. It creates this cycle of growth.
I really like that metaphor. Every dollar an employee gives it agency. And this next one, wow, this takes incredible discipline. No spend days. We're talking about actually scheduling days, maybe even weeks, where they spend absolutely nothing beyond the bare essentials. It's not just saving pocket change. It builds serious discipline.
Right.
And it forces creativity in managing money, makes you aware of where it just disappears.
Precisely. It sharpens that awareness of what really adds value versus what's just impulse. And closely related to that is the habit of negotiating. Everything. Millionaires apparently routinely negotiate prices, deals, on everything you can think of. Big stuff like homes, cars, interest rates, sure. But even, everyday services or smaller purchases,
Yeah.
they get that every dollar saved by asking is a dollar earned. Often costs nothing but a few minutes.
Exactly. It's valuing your money, valuing your time, not just accepting the first price you see. Speaking of time, here's another weird one. They read more than they watch TV. Apparently, many successful people make reading a priority books, industry reports, financial news over just passive entertainment.
It's not just about gathering facts. It directly expands their financial knowledge, helps them build better mental models maybe,
Yeah.
spot opportunities faster.
Absolutely. That intellectual curiosity is fuel. It drives better decisions. It's continuous learning. And then there's how they approach buying things. Aiming for quality, but buying less often. So choosing durable, high-quality stuff that lasts instead of constantly replacing cheap or trendy items.
Right.
The initial cost might be higher, yeah, but it saves money over the long run, reduces waste, and honestly often gives a better experience, like a good appliance versus a cheap one that breaks.
Yeah, that makes total sense long term. It's just a different way of calculating value, isn't it?
Yeah.
And finally, one that I think is just so effective, automating savings and investments. Millionaires often set things up so money goes straight to savings or investment accounts before they even see it, before it can be spent.
Uh-huh. Systematizing it. It's almost foolproof for building wealth consistently. Takes the emotion out of the save or spend decision each month. So, okay, what we're seeing here is these habits aren't about deprivation, really. They're about being incredibly strategic, intentional. For someone maybe just starting out thinking, wow, that sounds extreme, what's the core takeaway?
Yeah, if you boil it down, these habits really underline that building wealth isn't mainly about how much you start with. It's about how smart you are with the money you do have and the discipline you apply. It's a set of choices made consistently, no matter your income level now, that builds this really solid foundation for later, like building financial muscles.
Okay, so building those muscles. Now, here's where things get, wow, really interesting. Beyond the daily habits, our sources dive into some genuinely weird or at least overlooked moves and some exciting new frontiers that could lead to significant wealth. This is where we step outside the standard advice a bit.
And this brings up a really important question for you listening right now. How do you spot those genuine opportunities that aren't on everyone's radar yet? And maybe more importantly, how do you approach them smartly? Without getting swept up or taking crazy risks, it needs a different kind of attention, maybe a methodology.
Let's talk about that finding your financial GPS, maybe, in complex markets. One source tells this story about a trader, Kathy, a housewife, initially terrified of trading. Picture it, staring at the screen, heart pounding, palms sweaty, paralyzed by the fear of clicking the wrong button. I think many of us can relate to that feeling with complex financial stuff.
Oh, absolutely. Analysis paralysis.
Right. But Kathy's breakthrough wasn't some magic bullet. It came when she found a structured approach, a method that gave her clear signals when to enter, when to exit. It acted like her financial GPS. It was systematic, analyzing indicators, price action, taking the emotion out of it. And the result? In just a few months, she went from that paralysis to confidence. She was managing her investments effectively even, the story goes, from a sunny beach.
That's a powerful story. It really shows how overcoming fear through structured learning can open up completely new paths to wealth. So for you listening, the takeaway isn't necessarily one specific tool, but the power of having a method. It shows that even volatile things like trading can be approached systematically. It helps manage the psychology, identify potential chances, move from guessing to strategy.
Yeah, strategy over panic. And speaking of volatility and new avenues, let's jump into crypto. The big question everyone's asking, with these huge surges, are you too late? Is the boat missed? Our sources suggest, well, caution is always key, but there's still significant potential, and the landscape is changing incredibly fast. We've seen Bitcoin hit, near $124,000, Ethereum racing towards $4,800. These are big numbers.
Huge numbers.
And what's driving it, it's not just individuals anymore. It's massive institutional buying, big ETF inflows, like over 80 major companies holding Bitcoin on their balance sheets, even the US government launching a strategic Bitcoin reserve. These aren't small signals. They point towards serious legitimization, adoption by major financial players, even governments.
That's what's fascinating, isn't it? It signals this maturation from a niche tech thing to something recognized as a store of value and investment. But it also raises that question again. It is volatile, extremely so sometimes. So for anyone thinking about getting in, the expert advice from the sources is pretty consistent. Maybe start small, a 2% to 5% allocation, and use dollar cost averaging DCA, investing a fixed amount regularly, whatever the price. It averages out your cost, reduces that temptation to time the market.
That's really sensible, practical advice. And one source shared their own strategy, which is quite clever. They're apparently quietly accumulating more crypto without adding new funds. How? By using strategic options trading. For you listening, this might involve things like selling covered calls on crypto you already own, or maybe cash-secured puts.
Right, generating income from the asset itself.
Exactly. That premium income they earn. They use it to buy more crypto without putting in fresh cash. It's a way to compound in a volatile market while trying to manage some risk, making existing assets work harder.
So it's clear, isn't it? There's this whole world of opportunity out there, some established, some very new, but the common factor is needing smart, informed choices. Cultivating that mindset, open to learning, understanding risk, willing to try unconventional strategies. Once you have a clear method that seems paramount, it's not about chasing headlines. It's informed, methodical exploration.
Okay, so beyond direct investing and trading, our sources also touch on other really compelling ways people build wealth. Things like creating diverse income streams and even understanding the The very nature of value itself, it really broadens the picture. Let's look at diverse income first.
Yeah.
One idea mentioned is inspired by Humphrey Yang's method for doubling savings. It's not presented as magic, but as smart systems, based on consistency, clear goals, and being incredibly mindful about spending. It's a grounded approach, optimizing cash flow. Maybe it involves meticulous tracking, setting aggressive savings targets, then automating transfers so it just happens.
Yeah, it highlights how seemingly simple actions done consistently, systematically can add up hugely over time, creating an efficient, almost automatic growth system for your money.
Exactly. And then there's the, let's say, truth about passive income. Our sources kind of bust some myths here. They clarify that not all passive income is truly hands-off. Far from it sometimes.
Right, a lot of setup often
Yeah,
involved.
significant upfront work, ongoing maintenance, strategic decisions. The key is understanding what actually works for real people building wealth, not just falling for those get-rich-quick doing nothing schemes. It's often more like active-passive. A tangible example they give, very relevant today, is writing and selling ebooks. You package your knowledge, your unique insights into a digital book, no publisher needed, and you can earn repeatedly as people buy it, leveraging expertise into a scalable income stream.
And what's cool there is how it sort of democratizes sharing knowledge, right? Empowers individuals. Create something once, and it can potentially generate income for years with minimal extra effort after the launch. A modern take on intellectual property.
And thinking even bigger geographically, the sources point to exploring top countries for real estate investment in 2025, looking beyond your local market. Opportunities with high growth potential, good rental yields, maybe investor-friendly policies. Getting global passive income. Could be apartments in emerging markets, commercial property in stable regions. It just shows your investment horizon doesn't have to stop at your own borders.
Okay, now let's shift gears slightly. Talk about ambition, grit,
Mm-hmm.
maybe controversy. A lesson for the movie The Founder. That gripping true story of Ray Kroc, the guy who turned a small burger stand into McDonald's. It's a real masterclass in drive.
Relentless drive. Absolutely. The core idea is Kroc's almost pathological hustle. And let's be honest, his sometimes questionable tactics to convince the McDonald brothers to let him franchise their brilliant system. He saw the potential for scale they just didn't or couldn't act on, and he pursued it with this incredible, almost terrifying tenacity. Like, I'm not leaving till I get this.
And why it matters, why it's in our sources, is it's this raw, real-world lesson. Ambition, persistence, but also the moral gray areas in business. Success isn't always clean and pretty. Sometimes it involves really tough decisions, intense pressure, pushing boundaries. It makes you ask hard questions, doesn't it?
Yeah.
About the cost of ambition, the line between shrewd business and maybe ethical compromise. A fascinating look at the human side of empire building.
So the action step for you, listening, maybe it's think big, but keep your ethics in check. Know when to hustle hard, pursue that vision fiercely, but also know when to pause. Reflect, consider the wider impact. That balance seems crucial.
That reflection piece is key.
Okay, finally, let's end with a really provocative idea. The $1 million nothing. The wealth illusion. It introduces this concept that value can literally be created from nothing if enough people agree it has value and are willing to pay. Conceptual art is the prime example given.
Right, like an invisible sculpture selling for millions.
Exactly. The source author even jokes about selling a blank page from their notebook, asking, art is subjective, right?
Yeah.
It really makes you stop and think how much of the value we assign to things is just collective agreement, perception. It challenges that whole idea of intrinsic value.
And that's what's truly mind-bending about it. It highlights how much of wealth and value itself often hinges on perception, on group agreement, sometimes on brilliant marketing or storytelling. It's not just art. Think about luxury brands. The premium isn't just the materials, it's the story, the status, the perceived exclusivity. It really challenges our basic assumptions about what's real value, how wealth gets built, shows this invisible layer of human psychology underpinning so much of our economy.
It absolutely does. Challenges our definitions of valuable, how wealth happens, shows that perception and agreement layer underneath so much.
Yeah.
Crypto, art, brands. So wow, we've gone from those disciplined, sometimes weird millionaire habits through the exciting volatile frontiers of trading in crypto to diverse income streams, entrepreneurial grit, and even the philosophy of value itself. The core message, I think, running through all this is pretty clear. There's no single normal path to wealth. There's only what works and what makes sense for you. But the common thread, it seems to be intentionality.
Go
a
ahead.
willingness to be unconventional, and being open to constantly learning, adapting,
Got it.
building a financial philosophy, not just a pile of assets.
Yeah, exactly. What it all boils down to is that building wealth is less about one rigid formula and more about cultivating this dynamic mindset, one that adapts, learns, actively looks for those overlooked opportunities. It's about being an active, critical participant in your own financial journey, not just passively waiting.
So, as you think about everything we've talked about today, here's a powerful question from our sources we want to leave you with. It really invites action. Which wealth building idea, one you've never tried before, will you explore first? Keep digging, keep exploring. Find your own unique path to financial freedom. We'll catch you on the next deep dive.